Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. It's going to be commodities, precious commodities, wealth building, and or financial topics. Say precious metals because we got a lot of precious metal stuff that we're sharing today. They do look very good. If you need any help with anything, check out finding-value.com. Use the word discount and coupon code if you are interested in individual companies and how to play this commodity bull market. And if you want to follow me on Twitter, it's at finding_finance. So let's get in here, see what's going on. I'll give you my financial opinions. So, ladies and gentlemen, it's my pleasure to introduce to you a dear friend who hasn't graced us with his presence since January of 2008. Please join me in welcoming back the amazing and incredible $80 spot price on Uranium Ask and his best bud $78.50 spot price. So we are inching our way into the upper 70s towards that $80 price, and we'll see if anyone puts in a bid for the 80. So that's looking good for uranium. We've got Patrick Karam here. He says, my preferred time frame is the monthly candlestick charts. Why? Because my chances of getting whipsawed are drastically reduced. See that upper wick? Noise from smaller time frames. So yeah, U.S. stocks are in trouble, and this is U.S. stocks priced in silver. So there's U.S. stocks priced in silver. There it is. You can see that we rolled over in 2001, 2005, 2018, 2022 is the peak here, and we're rolling over, ready to break. 05 is there, 2023 is right there. And you can see that we had a wick coming back up and came back below that resistance trend line. What does this all mean? It means that this is more evidence of a commodity bull market that is underway. Silver outperforms stocks or financial assets in a commodity bull market, and that's exactly what we are staring at. And we could see a vast outperformance at some point soon where silver could drastically outperform stocks. That could also mean that there could be a market slowdown as well, potentially. Uselink, talking about SPUT Physical Uranium Trust. This is hella bullish. I used to hear that a lot on the West Coast, peaking up from a rising wedge. However, a false breakout here, and that bullishness is gone with swiftness. And I'm not in the false breakout camp, guys. Obviously, we'll wait and see, but we need to push forward, keep it going. And that's the SPUT Physical Uranium Trust that is, I call it turtle heading out of its resistance. It's just peaking out. And we want to get good drive through and a good monthly closing in November here to stay above that trend line. We got Market Sniper here talking about silver. He says the third and largest bull flag for the silver $45 run is what his projection is for this big flag pattern, all the way up to $45. And the flag pattern is this big boy that goes all the way over it here. Big boy move. Let's see if that occurs. Logan says, this is true that all recessions are different for housing. A recession doesn't equal a housing crisis. Home price change lasts 6 recessions. And really what this is what is driving the recession. If it's the real estate market and we've got forced selling, then it looks like 2008. That was a very bad loaning. They had a lot of bad loans out there that foreclosed. That was much like the 1929 crash. 1991, that was also a market slowdown in housing. It went down 1.9%. Huge pullback there. That's a huge bubble in real estate. All of these areas outside of 01, we had an overbuilding, an overbuilding, and an overbuilding here. We do not have an overbuilding in 2020 and 2001. And you can see the home prices went up during both of those time frames. Rolling down to Lance, the average 30-year fixed mortgage rate slips to 7.36%. That's the lowest reading since September of 20th. So if rates continue to drop, what I would look for, there's two things I would look at. I would look at housing starts. If housing starts to go up, housing starts start to go up. That's a positive thing for an inflationary driver. And we also want to see if home sales volume increases. Those are the two things that I would be watching to see if we would get inflation back. Now, there could be a gap between today, a slowdown, and inflation that comes from the real estate market 12, 18 months from now. So the slowdown that occurred, in 2023 will be felt in 2024. There's a little bit of a lag between all of this. If no money's coming into the system, or I should say, not as much money, you would see a slowdown in the rate of inflation. So it's a slowdown of the increase. But there is deficit spending, fiscal spending going on, which could overpower the bank lending side of things. And that's where I don't know which one's going to overpower what. It's hard to gauge that perfectly. You could also say that the M2 money supply could be a gauge of it, and it has contracted, and that could materialize as a slowdown in the market for sure. The whole world will be buying into silver very soon. Over 20 years of consolidation will end in a pretty big bang. So he's talking about silver price, silver, big move up, consolidation, and there's your three hump. It's 1, 2, 3, and then we're going to see hopefully a big break in silver. That's what my expectations are. I think gold's sitting on top of all its patterns, and I think there's going to be a big squeeze there potentially. Rick Rule also saying the real silver squeeze will happen when entities like pension funds go from holding no precious metals to allocating 2 or 3%, and that's precisely what I think is going to happen. That's his opinion there. Lance on Lennar, or however you want to say it, a home builder ranked number 119 on the Fortune 500 is presently promoting a fixed mortgage rate of 5.75% in Colorado. Want to learn more about builder buy downs? Subscribe to this guy's thing. They can sell these homes if they buy down the rates. The demand is there when the rates are bought down and the affordability is better. It's a function of the interest rate. In crashes, the interest rate won't matter and the demand will be completely squashed in a housing bubble. So the fact that they're doing this and that they've been successful at selling those homes makes me think that we're not in a bubble, like a big bubble deleveraging type event. The Magnificent Seven are wildly overvalued compared to history, even with the 10-year yield at its Tuesday low of 4.44%. On this basis, even the other 493 collectively look a little expensive. S&P is over here. This here is your nominal U.S. 10-year bond. So we're in this general location this way here. And this is your valuation. A cheap valuation for a 4+ year bond yield is down here where the trend line's at. Look where the Magnificent Seven is. Way up in no man's land. Super expensive. I don't know. I mean, I wouldn't touch these up here even with other people's money, in my opinion. It's just too expensive. It's overpriced. We got Grady been saying lately that silver looks good. As said, this is not the time to look away or lose interest. That is one beautiful chart in so many ways. Are you watching silver here? The silver spot price is starting to move up based off of his time frame that he's using. So when you use different time frames, you can see different results. And he's using probably like a yearly or something time frame here. Can't really see where he's got it. Either way, he's got a shoulder, head, and a shoulder that's developed, and we're breaking that to the upside. I've got that on my daily update one as well, but silver looks fantastic. Patrick says this could be the most bullish chart for gold. Are you getting excited? And what this is showing here is the gold price. That's the cup and handle here. And then you've got the US dollar index adjusted for inflation breaking to the downside, potentially. And we've got the breakout line here and the breakdown line here. Gold breaking out to the upside, and then the dollar breaking down to the downside. What this is and what this is basically this is telling you that you're in an expansion phase of real estate potentially, and this is your recovery phase of real estate from 2011 to where we are today, and we could get a big expansion in home building. This is exactly more data for that that you could use. Wheat has a 45-year parabolic base and is now backtesting inflation is not done, not by a mile. Unfortunately, and when Fed goes QE infinity, this chart goes ballistic. Get knowledge, need to make use of the commodities bull market. This is wheat, 45-year chart. You can see that we've got some nice good support on this parabolic base that is moving to the upside. We're seeing a lot of parabolic bases based in a bunch of different currencies. We can see a big move to the upside as this continues. Chart of the day, let's hope the U.S. economy is truly slowing down, particularly manufacturing, and that the winter is mild. U.S. stocks or inventory of distillate fuel, diesel, and heating oil are ending the fall season at their lowest seasonal level in data since 1982. There it is, and we're coming out of the cloud which surrounds the average. So we are coming out at a very low level for diesel and distillate fuel or heating oil. Warning, business inventories nearing contraction levels. The last 3 times happened during the dot-com bubble, the financial crisis, and the pandemic. Buckle up is what he says. It looks like when you cross this zero line, that's when the contraction happens. We haven't crossed it yet, but we'll see what happens. Gary says, we've been waiting for the dollar to produce some downward momentum as it begins the declining phase of its intermediate cycle. It looks like the CPI was the trigger to ignite that drop. It's going to become much harder for the cartel to keep the metals suppressed with the dollar in decline again. In the meantime, we are making insane gains on our stock positions. Sweet. Coming on down, let's not forget the guy who said foreclosures are up 700%. Smiley. The number of consumers with new foreclosures and bankruptcies in thousands are still incredibly low. And we could just be moving sideways, basically bottoming out for a good period of time. I've seen the credit scores of a lot of these people who own homes, and they're awfully high. I don't think they're going to be foreclosing anytime soon. A lot of people have a lot of equity in their house. I just don't see why they would hand the keys over. I think they're going to do everything they can to keep the home, especially with the equity that they've got. Of course, I hit the wrong button there. So scrolling down to silver again. The chart is now ready for the first time, really. So real energy is now building. Not the time to look away. 14-year perfect triangle, false breakout done. Bullish reversal candles, backtesting black midpoint line and green arc. And riding a moving average of 50. Resistance line is weakening. We're just hitting that resistance, weakening those sellers up there until we punch through. We've got Tavi also talking about gold. We've got very interesting setup. A decline in the dollar of today's magnitude often coincides with major bottoms for gold. That perfectly aligns with the metal gearing up to break out from a historical triple top, and we're ready to break here, guys. Let's kill this thing. These points here, the little arrows, all coincide with the DXY index bottoming here. So we could see a big move. Fingers crossed. And we've got another one that just occurred here. So for the oil bulls, a few more days before the bottom for November. So let's just keep chugging along here in WTI. This is going to require $250+ oil. Saudi Arabia has announced plans for Epicon, a new mirage rising from the desert on the Gulf of Aqaba, centered around 275-meter skyscraper. Some people think that when we start building these gigantic buildings, that we are entering closer to the peak of the real estate market. You know, they start building these gigantic projects. So we're going to start seeing more of these big buildings starting to be erected throughout the world, signaling that the real estate market is getting closer to its end. One of the many larger gold companies we bought at the 2022 lows, he's talking about this gold company Harmony, and you can see a shoulder, a head, and a shoulder. We're also seeing this exact setup in oil, natural gas, and a bunch of different commodities. So it's not just this one company, but there's a lot that exhibit this. And that's where I'm going to end it, guys. That's what I've got for today. So give me a thumb up for the content, subscribe to the channel, subscribe to the website if you haven't already. And everything else, I mean, it looks really good for precious metals, looks really good for a lot of the commodity areas. But a lot today, uranium looks fantastic. Let's hope the momentum can continue. All right, guys, we'll catch you later. This is Finding Value.